Let's talk about tax evasion or tax fraud exposure in a divorce and why a dual licensed tax attorney and CPA like me can help. If you're going through a divorce and there's any chance whatsoever that tax fraud is a part of the backstory, if there's hidden income, fake deductions, undisclosed offshore accounts, or abuses of cash-based businesses, this is not just a family law issue. Your divorce can quickly turn into an IRS estate criminal tax investigation and prosecution. Especially when one spouse gets angry, scared, or thinks strategically, they may attempt to use tax fraud disclosure threats to attempt to gain leverage in family law court. One wrong move here can dramatically complicate your divorce, evaporate your assets, and cost you your very freedom. And here's the scary part. If you're here on a green card, in today's political environment, it can even get you deported after you're finally released from prison. Hi, I'm David W. Klossing. I'm a dual licensed tax attorney CPA, and I've additionally earned a master's degree in taxation along the way. And for decades, our firm has helped clients nationwide and internationally in dealing with high-risk tax disputes, audits, and criminal tax exposure. Today, I'll explain why divorce can trigger criminal tax fraud risk, how family law required disclosures can spiral into criminal tax exposure, and why you need legal privilege, as in attorney-client and work product privileges, to even go about addressing these issues. Here, you can't just rely on accounting help. When the stakes are this high, don't make that mistake. Divorces require tons of financial disclosure, a lot of it. Tax returns, bank records, business records, statements, title transfers, listing of assets and liabilities. And as you already know, divorce is extremely emotional. Suspicion turns into accusations, and the hiring of forensic accountants. Accusations turn into demands. Then documents get exchanged, analyzed, and challenged. If there's anything questionable in prior or current tax filings, like unreported income, overstated deductions, misclassified workers, unreported offshore activity, divorce is going to shine a bright spotlight on it. And once there's an on-the-record admission, you will not be able to take it back. Listen, the IRS in many states are known to have AI bots searching the public divorce records looking for potential criminal tax targets. Here's what people underestimate. In divorce proceedings, you're going to wind up making statements under oath. You're going to communicate via email. You're going to make declarations. There's going to be mediation notes. There's going to be deposition recordings. All of these records combined can become a roadmap for the IRS or other federal state agencies, especially if someone hands them over as an attempted weapon in a divorce. Your divorce attorney is not enough here. Most divorce lawyers are excellent at family law, but none of them are trained to manage criminal tax exposure in divorce. I've never seen it. Most will push for full disclosure. Most of them don't understand what that does to your Fifth Amendment rights or your ability to use the IRS or state voluntary disclosure programs, or what it does to your exposure to a criminal tax referral. They just don't get it. And their engagement letter excludes tax ramifications. Divorce law and criminal tax defense often have conflicting goals. Family court pushes for disclosure. Criminal tax defense often requires controlled disclosure along with very careful strategy. Listen, just calling your CPA here can be catastrophic. A CPA can be great with numbers, but CPA communications are not protected the way attorney-client communications are. If the IRS or state investigates your accountant's emails, drafts, or work papers, all of this can be subpoenaed. And your accountant can invariably become government witness number one against you. And here's the worst part. They're likely to attempt to toss you under the bus if their own reputation becomes at risk. If criminal tax exposure is even possible in your divorce, you need attorney-client privilege, and you need accounting support that's under a Covell agreement. Accounting should be done through counsel in a privileged structure. So here's how our dual licensed tax attorney CPAs change up the game. When we step in, we do 3 things immediately. Number 1, first, we protect communications under privilege. That's so that you can talk with us truthfully and safely before you say the wrong thing publicly. Second, we assess the civil and criminal tax risk. Are the accusations floating around real? Are they provable? What tax years are at risk? What's the likely IRS or state taxing authority posture regarding your taxes? Third, we coordinate with your divorce counsel. We coordinate so that the divorce strategy does not create avoidable criminal or civil tax damage. Here, that's the key. We help you walk the line between divorce disclosure obligations and criminal tax risk. So when is a divorce likely to lead to criminal tax exposure? We've seen that in most divorces, they become dangerous when one spouse controls the finances and the other winds up suspecting tax fraud or hidden assets. It's dangerous when there's a business with unreported income or fraudulent deductions, where there's undisclosed offshore financial accounts or unreported foreign income indicators, when the prior returns simply don't match the lifestyle that you've led or the bank activity, where one spouse threatens to turn in the other spouse to gain leverage, especially if their forensic accountant claims to have determined that tax fraud has occurred or claims that assets have been stolen from the marital estate. That happens all the time. In short, when disclosure meets resentment and scorched earth family law tactics, that's when you need us the most. It's more common than people think, not because everyone is a tax cheat, because divorce forces financial transparency and creates incentives to accuse. Sometimes the accusations are real. Sometimes they're mere paranoia. Either way, they must be handled strategically before things become irreversible. Can both spouses face exposure for tax crimes? Hell yes. If you file jointly, both spouses can be held criminally responsible for the returns at issue. Yes, innocent spouse relief exists, but it's not automatic, and it can be hard to win in real life. So a spouse who threatens disclosure may be exposing themselves at the same time, civilly and sometimes criminally, depending on what they knew when they signed the returns at issue. Do not react emotionally. Do not start sending emails. Do not try to fix records or backdate anything. And whatever you do, don't talk to non-privileged professionals first. Your first move should be confidential legal counsel with a criminal tax defense focus, because timing matters. And once the IRS or state taxing authorities are alerted, many favorable options simply disappear. Is full disclosure of assets required in a divorce? In most cases, yes. The courts expect full and accurate disclosure of assets, income, and financial activity. But how you compile, analyze, and present that information can create tax consequences, and even criminal tax consequences if you do it wrong. So what's asset dissipation? Asset dissipation is essentially wasting, hiding, or diverting marital assets to reduce what the other spouse can go about claiming an interest in. Here's what's dangerous when dissipation overlaps with criminal tax behavior, like hidden income or fake deductions. This issue can quickly escalate to criminal tax exposure. How can your spouse or the IRS identify undisclosed assets or income? Patterns of behavior. Bank deposits that don't match the return. Lifestyle that doesn't match with reported income. Business books that simply don't reconcile. Foreign transfers, offshore indicators. 1099 mismatches. Third-party reporting. And during divorce, a forensic accountant may look harder than ever. This is exactly when you need a privilege strategy first. Can you seek a tax-motivated divorce or annulment? Be careful here. Tax agencies can disregard sham arrangements. If your divorce looks engineered to dodge creditors or taxes, this strategy can quickly backfire. This is not do-it-yourself territory. When can divorce court or financial records be sealed or redacted? In some cases, courts can limit access, but you cannot assume privacy. Once sensitive admissions are in the public filings or testimony, you lose control over where that information goes. So what's the key takeaway here? Don't kick the hornet's nest. Divorce is already a legal war. Tax fraud allegations turn it into a federal and state criminal tax exposure event. The worst thing you can do is stumble into on-the-record admissions or let non-privileged professionals create discoverable documents that damage you later. You need a strategy built around privilege, risk assessment, and coordinated legal planning. So in closing, if you're in a divorce and tax fraud, hidden assets, and offshore accounts, or aggressive filings are part of that situation, whatever you do, don't guess. Don't wait till all this information is out in public. Contact the tax law offices of David W. Klossing to speak with a dual licensed tax attorney and CPA today. Call 800-681-1295 or visit klossingassociates.com to schedule a confidential reduced rate initial consultation today. The right strategy put in place now can prevent the divorce from becoming a criminal tax case later. Thank you very much.